Okay, so something huge just happened in the world of fintech. Seriously. An entire category that was kinda on the fringes just had a massive, triple-shot espresso of a week and basically crashed right into the mainstream. We're talking about prediction markets. And believe me, this shift could change how you interact with, well, everything from sports to the economy.
Yeah, you know the one. The person who'd bring charts to dinner and was always talking about how they called the last election using some, obscure mathematical model. Super interesting for sure, but definitely niche. But in just the last few days, 3 major events have completely flipped the script, pushing prediction markets right into the spotlight. So let's break down exactly what happened, piece by piece.
First up, we've got Gemini, the crypto giant founded by the Winklevoss twins. They just pulled off a really slick move that's all about getting federal approval and, well, walking right through the front door of regulation instead of trying to sneak in the back. Okay, so let's get into this a little bit. What Gemini secured is something called a Designated Contract Market License, or a DCM. Now, this is basically the golden ticket from the CFTC, that's the Commodity Futures Trading Commission, the main regulator in this whole space. It gives Gemini the official green light to run prediction markets on things like economic data or crypto milestones. It's a huge deal.
And this really highlights a massive difference in strategy. See, while a lot of other prediction markets are stuck in these messy state-by-state fights over whether or not they're just unlicensed gambling, Gemini just sidestepped that whole mess by going straight to the feds for approval.
Right? While everyone else was busy arguing about the plan, Gemini just used its compliance core brand to its advantage. This proves that federal legitimacy isn't some boring hurdle anymore. It's a powerful competitive weapon, and it could put these markets into mainstream financial apps way sooner than any of us think.
So let's move on to the next piece of the puzzle, because while Gemini was busy focusing on regulation, 2 other giants were laser-focused on mass market adoption.
What we're looking at here is a super smart partnership. You've got the sports commerce behemoth Fanatics teaming up with Crypto.com. So Fanatics brings its massive user base of fans and all their data, and Crypto.com provides the underlying trading tech, the Web3 machinery. And the result? A brand new platform called Fanatics Markets.
So here's the crucial point. It's all about the framing. This isn't being sold as some complex financial product for Wall Street traders. Nope. The goal is to make it feel like a totally natural extension of being a fan, a way for millions of people to engage with sports, entertainment, and cultural events on a completely new level.
I mean, that kind of nails it, right? It's that perfect mix of the competitive energy you get from fantasy sports, but with this extra layer of fintech swagger. The whole idea is to make trading on outcomes feel as normal as checking the score on your phone.
And that brings us to our third key development. Now, this one isn't happening in a boardroom. It's unfolding in a courtroom. And honestly, it could define the entire future of the industry. This gets right to the heart of the legal tension. See, on one hand, federal regulators like the CFTC often see prediction markets as financial instruments. But on the other hand, some states look at them and just see unlicensed gambling. And that's the exact conflict that Kalshi, a federally regulated exchange, is fighting right now.
So just recently, the state of Connecticut tried to shut Kalshi down. But, and this is a huge but, a federal judge stepped in and put a temporary halt to that order. This allows Kalshi to keep operating in the state while the case moves forward, giving them some critical breathing room and a major dose of momentum.
It really does have that kind of drama, doesn't it? It's like the game was paused, everyone held their breath, and then the ruling just tilted the scoreboard right back in Kalshi's favor. It's a huge reminder that the future of this space is going to be shaped as much by lawyers as it is by developers. So let's tie all 3 of these threads together. We've got a legitimacy play, a mainstream play, and a legal play all happening at the exact same time. So what does this new reality for prediction markets actually look like? So, to recap it all, Gemini showed us that federal legitimacy is now a real strategic advantage. Crypto.com and Fanatics are proving that mass adoption happens when you frame this whole thing as fandom, not finance. And Kalshi's fight shows us that the ultimate rules of the game are still being written, in court. The conclusion from all this is pretty clear and it's powerful. This trifecta of events means that prediction markets have fundamentally changed. They're no longer that weird cousin in the corner.
They are officially becoming part of the financial and cultural world that we all interact with every day. And that really just leaves us with one final thought to consider. Now that they're here, are you ready to play?